So no, I probably should have watched the entirety of that, but I didn't get a chance of it. In fact, I've been in meetings all day long, all the way up until about 2 minutes ago when I logged in. So I didn't even get a chance to do as much research as I wanted to, but dive right in, Katie, into Champs. Why is Champs not, from your perspective? Okay, Andrew wants to say something though.
Well, real quick. So Champs is the case where they had the healthcare business with which they contributed cannabis within it. Yeah.
Yes.
Okay. So
Yeah,
I
Californians Helping to Alleviate Medical Pain is a 2007 case way back when, where there was a not-for-profit that worked for multiple years, had an integrated service. Hi, Heidi. Had an integrated service center, like a real true wellness integrated service center, like you'd think of existing, that also from a membership prescriptions side had the opportunity to be able to dispense medical cannabis in medical marijuana in California under their medical schema. And so they were a 501c3 operated for, I want to say 3 years, maybe, or maybe 4, I can't remember. Anyway, they decided too hard, not going to do it. They shut. And then the service came in a couple years later and was like, hey, not only are you a not-for-profit, so they stripped the tax-free position away, which we would expect, but you are, so you're a C corporation, and we're going to apply 280E to your entire operation. And so they literally turned around, the service turned around, pulled them in, put them under audit, disallowed the 501c3, and then handed them a couple $1 million tax bill. And they were like, whoa, we're out of business, first off. And secondly, we disagree. And that is where Champs, Californians Helping to Alleviate Medical Pain, that it is the tax court that bifurcated the chart of accounts, not accountants. It's the tax court that did that. And that's why when we think to ourselves, what might the tax court do? We dust off that case because it's one of the very few where the tax court took action, and we as practitioners have a bright line.
Okay. And so is it okay if I ask some questions? Because I've been thinking about
this is Justin's show. I'll leave it. I mean, I'm not trying to take over the thing.
No, Justin, you go ahead. I can wait with my question.
So I'm still getting caught up from again, I didn't, so tell me why their argument that where they won, the part where they won, right? Because it's my understanding that Champs was able to win the deductions for the medical part of their service.
For the non-medical, yes, for the non-cannabis. So the easiest way to explain it, and Andrew DeWeese gets to this in that webinar, is the tax court took a look at the actual business operations that were happening in this 501c3. Because their argument was, we are not one business doing a unilateral thing that would allow the cannabis to be pollute our tax position. We are many things, and cannabis is a small part of the reality of what we do as a medical service providing endeavor to our membership organization. So the way that the tax court looked at it was describing them like coffee shops. Coffee shop A sells books, or excuse me, bookstore. Bookstore A sells books, and there is coffee and donuts and places to sit and the like inside of bookstore A. And the reality is that all of those things are ancillary. They are not a separate trade or business because they enhance what bookstore A is trying to do, sell books. Bookstore B is a bookstore that has a coffee shop attached to it. People can come in and get coffee and not buy books. People can go to the bookstore and not get coffee. That is a separate trade or business from what is happening. And what they determined in Champs is that the cannabis selling operation was significantly enough a separate trade of business because of the amount of revenue it generated, that the majority of the revenue was really produced by the non-trafficking medical services, the talk therapy, the AA groups, the yoga, the all the other stuff that was really happening. And so Champs really looks like coffee shop B two
Mhm.
trades or businesses. And and the problem with cannabis is that these medical dispensaries or even recreational dispensaries have said, oh, I can do that too, but they're not actually, they are being coffee shop A. Their paraphernalia, their t-shirts, their, their paintings, their whatever is just supporting buying weed. You're not walking in and sitting for 2 hours at a WeWork space that happens to be attached to a dispensary and never buying cannabis and using their free Wi-Fi. Like, that's not what's happening here. And so the problem with Champs, when you apply it to the current cannabis cases that have come after it, is that mathematically, if 2%, even in Harborside, 12% of your revenue is coming from ancillary services, well, that means 82% is coming from cannabis. What are you? Selling weed. You're not two stores. So you can't make that argument. It hasn't won again because of this this separate ancillary trade or business inside one. And so when we're thinking about psilocybin service centers, we're trying to, again, split the baby. And the rules have made it very difficult when it can't be co-located with a coffee shop per se, right? When it can't be a medical facility, it has to be its entirely non-medical environment, providing services and facilitation to customers, not treatment to patients.
Yeah, and I get, and this is exactly why I wanted you to be here, Katie, and just for those of you who we've spoken before. So Seth and B, we've had meetings before. Katie is an excellent devil's advocate. And
also known as the buzzkill in the
you're
room. Yes,
the
I'm
devil's
the big
advocate.
pain in the ass.
So what I want to do, and Andrew, I would say you can probably shoot with your questions first, but what I want to do is I want to make that argument work somehow. You know what I'm saying?
So do I, though. That's the thing. I do think cannabis, I think psilocybin fixes what cannabis fucked up, quite frankly. And I think we have a remarkable opportunity here if we're conservative and make a good argument to be able to do it right. And it'll help fix cannabis if we can get psilocybin right.
One thing that I think probably won't necessarily happen, because it almost can't happen, is the separation between, I think there's the service center. Anyway, I'm not even actually the best one to talk about this. So I'm going to hold my thoughts just because my nomenclature is not as good as it probably should. Andrew, why don't we skip to you? Why don't you go ahead and ask your questions?
Okay, so and B and Heidi know me well enough to know I'm also devil's advocate, but sort of the risk taker devil's advocate in some ways. So the first thing that separates it from cannabis altogether.
Well, first of all, introduce yourself, Andrew. What part of the business are you in?
So I'm a longtime software entrepreneur. So I've built and grown software companies for the last 2 decades. I'm a lawyer, but only for myself. And right now I'm working with service centers and facilitators to sort of navigate all the regulations, figure out how to set up businesses, find IT systems, and I'll start a service center at some point, but sort of figuring all that out and creating standards is what I'm focused on.
Right.
Okay. Sorry to interrupt.
No, it's good.
And he's doing the OPSCC. Don't forget that, Andrew. Don't forget the OPSCC. He's doing a lot of advocacy work.
Yeah, you have to advocate if you're going to be in this industry, and if you're a lawyer not advocating, then
no, I am. I've been writing.
No, I'm saying those lawyers that don't advocate hear it from me, both barrels, because that's what they should be doing if they've got that platform and a degree, then argument. Come on, give me a break. Yeah, I didn't even get to testify today, but separate matter. That's the bill. Okay, so I quit. The first thing is this business totally different than cannabis? Where in cannabis, and as I understand, trafficking is the, purchasing, sale, transporting of controlled substances. So yes, that's the criminal definition. It falls into criminal. There's no civil definition of trafficking. Right. So the trafficking, the criminal definition is that in cannabis, trafficking is 80 to 90% of the business. Oh yeah. What we're doing
you're going to have a service center cost and a facilitator cost that are probably going to be 98% of this business. The trafficking is this one little activity and it's super cheap. And I wonder, like, could you set up, so that's the first thing. And I don't know enough about the cases to know if the difference is based on percent of revenue, or if it's like there's an inextricably linked test. And if you
There is no bright line from the IRS or guidance on the matter.
That's
Period.
right. Okay.
That's the problem.
So we want to layer in the arguments, right? And so first argument is, well, here's the trafficking, and it takes up roughly this much of our labor's time, this much of this time. This is the costs, and the only main cost of it is going to be the materials. And as I understand, that can still be cost of goods sold.
Cost of goods sold is cost of goods
Right.
sold.
So theoretically, the trafficking part of the business is just the labor involved in the sale of, which is like one tiny moment of the whole session, right? It's a 3-minute part of it. And it's by someone who's cheaper than the facilitator. So the cost of the trafficking is incredibly tiny, and the materials, they're going to be like $15. Meanwhile, someone might be paying hundreds and hundreds of dollars for the facilitator to just sit with them. And the facilitator by law can't be involved in the trafficking. So like the argument for the facilitators is they're not involved in the trafficking at all. They're no different than an ER doctor showing up when someone's tripping and making sure they're okay. They're not involved in that at all. So that's sort of their side. And then I get into, well, how do you structure the business to offer alternative offerings? Well, what if you make rooms also available and have, breath work people around? Does that on the surface cover you?
Well, let's focus. I want to just make sure we don't get too far off the very specific conversation of it.
Yep.
Yeah, I want to make sure that we stay on. There's like 3 things happening there. There's the sale of the psilocybin, there's the facilitator, and there's the room that the facilitator and the patient.
There's the experience.
So those are the 3. I want to like really try to hone in on those definitions, what they're doing, and what part of it is trafficking and what is not, and what part is service and what is product.
Well, and the other problem is that code section 280E relates to a business that traffics at all and applies to 100% of the business because it trafficked at all. So you have just, so because I don't disagree with you, but I think we lose the argument, counsel, because the facilitation, not the pre and not the post, not the setup and not the integration, but the facilitation part. There's no reason for that facilitator to be there except for what? A Schedule 1 federally illegal drug that's been sold to make money for a business.
But not the facilitator, and the facilitator.
I'm straight into the facilitator. I think for the sake of argument, we have to stay out of whether the facilitator is trafficking or not, because that's going to deal with whether. I don't think the facilitator is trafficking. It's the service center that's the problem, because the facilitator can't do it at home, can't go to a place. So you have to have the service center. So what have we done? We've driven a non-trafficking person into a trafficking environment that they cannot escape from. And we have to help them make an argument that says the facilitator is not the issue here, but the problem is a $5,000 thing with $15 of cost and X amount of dollars to the facilitator. The service center cannot deduct the facilitator and will be taxed on $5,000 minus $15 of it. The service center is the problem, not the facilitator.
I just want to make sure that that's according to our current understanding and interpretation of the rule.
That is my understanding of how you would apply 280E to a federally illegal business called selling psilocybin, period.
So one thing I noticed, isn't direct labor able to be treated as a cost of goods sold? And isn't the facilitator sort of a direct COGS? Because if
You either have it one way or the other. Which way
That's
would you
another,
like it,
that's
sir?
another conversation we can pick up
okay,
on. That's another angle.
Absolutely.
Right now, what I'm trying to understand is the facility actually entirely, and the facilitator and the service center, in the business of drug trafficking, or is it a health, like essentially a healthcare facility, or providing a service in which there's a small amount of drug trafficking that is taking place? And then what can we do to really give ourselves, like, our narrative? And I talked to Seth and B about this, like, our narrative, some integrity, some weight.
Yeah, it's got to be defensible.
that
It's
this
not a
much
medical
is-
facility at all,
So
Justin.
yeah,
It can't be
it's
medical.
literally in the rules, rule 4300 location requirement. They are to not overlap with healthcare facilities licensed under Oregon Chapter 441. So anything that is legally under Chapter 441 and considered a healthcare facility cannot overlap with a service center in the rules.
Which is good if we're going to try to be bookstore B, right? A bookstore and a coffee shop. If we can't even have medical, what can we have? Would be my
That's
You
one
can't
thing I
have a
wanna-
restaurant and you
right.
can't sublet your space. You
Hold on.
cannot sublet your space.
So that one, I think people are reading that wrong.
I would agree.
I think you can totally sublet your space. The definition of sublet is very clearly defined to say subletting is allowing someone else to exercise the privileges of a facilitator, service center, or producer. That's a very narrow definition of sublet. I read that to mean you can't have some other licensee or someone else doing the things of psilocybin service.
And that's how I read it also. I do think sublet, we like generally as people think, sublet, and we really have to go back to the rule, which is why we like lawyers, to be able to be like, yo, this rule is very specifically defined. So that's why I said a minute ago, if it can't be co-located with an integrated wellness center or some sort of physical service center that we would normally think of, what could it be? Because they did make specific restrictions, but I'm talking with a group that's thinking like, hey, if we have a WeWork kind of center where people can have a microdose, be able to bring their own coffee in, and there's some sort of subscription to be able to sit and work at the thing, that is not a service center and that's not a restaurant. Like, there are ways, like, maybe we have to be more flexible and think about asking customers, or, you know, to be able to understand that they're not in that of course we know this is a therapeutic experience, but it is not a therapeutic model at this moment.
Also, one quick comment on the healthcare facility. So that clause that they refer to in the text where it says healthcare facility is actually a very small specific subset of healthcare facilities. It doesn't apply to most outpatient wellness center, clinic settings, doctor's offices. That's to include like hospitals, long-term care facilities, dialysis centers, birthing centers. It's keeping psilocybin out of those places, but it's not most healthcare facilities that are going to be doing this are not part of that definition.
So they basically don't want big hospital groups to make a psilocybin wing or something.
Can you expand on that, Seth, a little bit? So like, how is that? So B was kind of presenting interpretation where it was like, there's absolutely no overlap between a health related facility and a service center. You cannot have that language. From my perspective, the conservative argument is you cannot have like any kind of promises for any kind of therapeutic success by being like, by going to this facility center and tripping, or like having a session.
Those are two different things.
Yeah.
The definition of a healthcare facility in the measure is a very specific thing that is only applicable to those types of entities that I named: hospitals, dialysis centers, birthing centers, so forth.
Yes.
So that's one part. You can't have a service center in one of those kind of facilities. It just doesn't apply to most outpatient clinic settings.
But
let
the
me-
problem
no,
then
no,
becomes,
let me-
what is the premises? So then that, that has started to become the
Let me-
problem. Can we
yeah,
turn
let
these
me-
on and
no, no.
turn these off?
Let me try to finish the point that I was trying to make by asking the
sorry.
question. Is the service center a place where you could receive therapeutic services?
Well, you are, yes. I mean, that's even part of the measure is sessions like the preparation and integration sessions that aren't going to involve psilocybin at all.
So tell me a little bit more about that, like what's happening there. So you engage with the patient, you go and you meet, and you have a session, and then later on another day you have another session, and then you have follow-up sessions. So there's quite a bit of therapy happening, if I understand it correctly.
Yeah, we're not going to use the term therapy, because therapy is, speaking to your other point about this being a medical or non-medical service. It is being defined as a non-medical service, and therapy is part of that, but you can just call it a preparation session and an integration session. But yeah, that's at least one preparation session is mandatory for receiving the services. Integration sessions are optional. But like I anticipate that there are going to be service centers like mine that are going to have more than one. So you may have 5 separate visits, 2 prep sessions, 2 integration sessions, plus your administration session. So 5 visits to the clinic where you're receiving services, only one of which is going to include consuming psilocybin.
Which is why I think that's where we need to actually drill down into the argument, the defensibility that relates to, again, going back to service center or bookstore A, bookstore B. Like, I think you can make an argument that if the preparatory, you can make an argument both ways. In my mind, because you can make the preparatory session does not require you to then go on and do psilocybin, you can stop right there.
Mm-hmm.
I don't think that's trafficking. I think that you have the ability. Now, the question is, if you do go on, does it automatically bring that session with it? I'm not sure. We can make an argument both ways. So the question is going to be, how do we make the argument? But I think that the integration session, because it is completely optional, preparation, mandatory, integration, optional. I think optional gives us an ability to be able to have a better defensible position that says this is not trafficking. But the reality is that the facilitator is only there because of the psilocybin in the actual moment, in that actual journey. And so I don't think you can divorce those two in this current model. I think they should change it, frankly, but we'll get there.
So is it either that, like, if it's connected at all, if it's like a but-for proposition, if that's the rule, then it doesn't matter whether it's a preparation session. Like, no one would go to a preparation session if there wasn't the expectation and perhaps even payment for the administration session. So it feels like,
I don't know. I mean, let me tell you, I had a bad trip when I was 18 years old, and I'm interested in seeing what psilocybin might potentially do for me. But I had enough of a bad experience when I was 18 that even if I sat down with you for 2 hours and we walked through that and we got comfortable with that, I might very well be like, thanks, I'll give you $500 and that was a nice investigation and no thank you. I mean, I think that really is an option, and we have to be able to say no to say yes. And the reason I push that point is I want to be able to make that argument to the service that says, this is not mandatory. We have not trafficked yet. This is not related to trafficking. You have the ability to be able to call this off. And so it should not unilaterally just be glommed into the next phase, let's say 3-phase experience, right? And maybe you need 2 or 3 preparatory sessions. Still there's no indication that I'm still going to go forward, but I might prepare.
Right. So I think that's sort of what I'm saying is that was the argument I was making earlier, that like, if you set up your facility to allow people to participate in multiple different modalities, like breath work or yoga, non-trafficking stuff, and maybe it's rare and maybe that's more expensive than psilocybin because we're not staffed for it, like whatever it may be, if you provide options, the bulk of the revenue seems like it's pretty narrow. So if it's really about the trafficking and if you can divorce the two businesses, I think offering different modalities helps. And I'm just thinking broad guidance for people offering different modalities. I think the WeWork model is sort of, you're creating a social club. And certainly some of the service centers I'm talking to, that's an idea of like the membership club, like Seth was talking about, that there are all sorts of different ways. It feels like there are paths there, but the most important thing out of the gate is sort of, how do we set things up in the first place? That
Correct.
I think you're definitely like, my goal out of this is to come up with the simplest way to maximize deductions with the least complex business structure that we can come up with. And can we have somewhat of an 80 to 90% sound argument, at least, 90%?
I don't think we get to more likely or not in this until we have somebody that gets run through the guts of the.
Yeah, but that's kind of my
code.
goal, is to come up with the narrative that is a reasonable enough argument to be somewhat aggressive on deductions. I mean, obviously what would be super ideal is if there was a window where the facilitator or whoever it was that was responsible for administering the product went and bought it.
No, you just want the patient to do. The facilitator needs to never.
Okay, right. So the patient goes
That's
to
in
the
the rules.
window. It's a small part of the service center. The patient goes to the window, buys their cup of.
You keep talking about it like it's a cannabis dispensary, and it's not.
No, but there is an area in the service center where psilocybin is vended, right?
Yes.
So,
well,
There's an
so
area
it's
where
gonna-
it's stored.
it might be
then the
delivered to
service-
your room.
Yeah.
the
Oh, no,
service
It's got to be
representative-
controlled. It says it remains under control,
It
and
is
Trafficking. We call
there's
it
some
the
leniency.
trafficking room.
you call
There's
it
some
the traffic
leniency.
room.
We call it the trafficking room.
There's the trafficking room. That's a perfect example. It's a crude definite or name
It's just,
for
it's
exactly
legal
what we're
name.
saying. We're like, that's the trafficking room right there. Now, what's happening in the other room where the session is happening and there's facilities in there? Can we create like at least a phantom of a line that says that's the trafficking room and that's not trafficking over there?
I think it's going to take a number of different service center models with different owners of different risk tolerances to put together both a physical and a structural SOP position that's going to take a tax position. I think that's my question has always been, can you turn on and turn off that room where the actual facilitation is happening, so that we could maybe do by minutes in a week where there is something that's happening or the like, where we have the ability to do bifurcation in a way that has a sensible model and consistent kind of documentation process behind it. But it's gonna take the risk tolerance of each and every owner and their ability to really hold people's feet to the fire for the process to be able to be consistent. Heidi, in my mind.
Yeah, my question is, what is the strategy for someone who's not risk tolerant? Like, what is our strategy? The only thing I can think of is that we need to charge enough to pay our tax bill if we have to pay the whole thing.
Well, I
Is
mean, if
there
you're not
anything-
risk tolerant, and I think I'm talking to you tomorrow, I'm
Yeah, we're
talking
talking
out of a
about-
service center.
No,
Reality
you
is,
gave a range, Katie. You said there's a range of people with different risk tolerances. What
Sure.
is the strategy for the person who's the lowest risk tolerance?
is to apply 280E to more and to more of the space or more of the experience than someone who's taking this $15 as the only trafficking part of it. I think it is about making a consistent and a conservative position that is going to be able to say, here is how we are doing that, and then do enough modeling to be able to say, this is our price in relationship to it. The problem is, everyone in Oregon would love to sell their cannabis for $90 or $100 or $200 an ounce, and your consumer will not pay it. And so you will immediately have no one in your service center and be driven down, just like cannabis is, race to the bottom, whether your risk is tolerant or intolerant, regardless, because economics are going to drive the conversation in a way that puts the Justins and the me's in a place where we have to find a balance between what is more likely than not going to be okay and what is the argument when it's not.
Yeah, and when will we know what is going to fly?
Years from now.
10
When
years
someone
from-
gets
Where-
sued,
where
can I
does-
ask a question?
Yeah.
To follow up Heidi's question, like, if it's sort of, I want to make sure I understand what happens, because I don't know much about how IRS stuff works. We take all these deductions, we file our taxes, and some years later, or that year, if it clearly, remember, we're all going to look like doctor's office. We're not going to say, cannabis in our names and everything, like.
Well, actually.
Well, I'm just saying, like some may, but it'll take a while
Yeah.
for the cases to wend their way through. And then if we did it with made our decisions on good faith beliefs, and we're like, certainly not knowingly violating the law, isn't sort of the impact we get audited and we have to pay taxes on those things that
Yes, the best case scenario is you're not penalized for a frivolous tax position or a fraudulent one, and that you just are being handed a tax bill with penalties and interest, by the way, from whatever year. So that was the problem with Champs. Champs was a 2007. I think they shut down in 2007 or 2008. They were audited in 12. Court case came out 13, 14. These are years from now. They have been out of business forever. And there's no way that they are going to be able to pony up millions of dollars for their illicit drug hidden drug position, trafficking business. When they really made losses, they were operating like 501c3. You look at their books and you're like, yep, those guys were not trying to make money, so I think that the problem, and to answer Heidi's question, we are on a 10-year runway because we are still auditing. The IRS is getting around to 2014 tax returns for cannabis right now. And that was before a pandemic. So what I think we have to do is and this is where I think psilocybin, there were no conversations like this before we came into cannabis, guys. This is where psilocybin really does get to actually try to turn the tables. If we could come to, in Oregon, a consistent position that's inside of this spectrum, not way out here, but everybody's a bit risk tolerant and people are a bit risk seeky. But I certainly haven't met the people in psilocybin I met in cannabis that were like, fuck it, let's go do, what all that people are more sensible, because I think there's a medical modality still at its treatment base here, even though we're not calling it that.
That was the mushroom house.
Well,
Screw those guys, and I'm glad they're in jail and they're about to get completely fucked. Let me tell you. Oh my god.
and that's
And
sort
should.
of
because they about ruined it for all of us, and no thank you, bad actors. But I do think that we're gonna have to come to creating a position in a couple of really specific places. In my mind, it's this integration session, it's the preparation session into the actual experience. Does it attach, or do we make the consistent argument that says because these things can be stopped and or are optional, we are always going to treat them a certain way? I think that's one. I think two is being able to say, can the facilitator be separated from the trafficking, the experience? Is consuming psilocybin a trafficking endeavor, or is it experience? And I think somebody's going to have to take a position on that. And that, Heidi, is where you would be more conservative. You would be more conservative to say that the bulk of both the time and the money is subject to 280E. And then the third thing is, what can we co-locate with this to create diversity? What can we turn off and on the licensed premises so that it has the opportunity to generate funds that are not subject to 280E inside of the current schema we have? Or what do we need to fix in the schema to Tom Eckhart and Sam's, Chapman's and Kopelik's legislative ear bending capacity? What do we change to try to be able to make it so these things have an economic reality that's going to put them into, that's going to make them viable and incentivize people to stop getting their current microdose off the street and bring it into a public safety place, which is where we all want it to be.
So it seems like there are formulating a set of best practices to mitigate the risk. And I think, to directly answer Heidi's question, for those less risk averse, should be stockpiling the cash they would have paid as taxes year after year. That's the safest thing. And
the reality is you can't operate on cash. You need that for cash flow.
Well, yeah, I mean, it's yes and no, right? It's about how much risk, and if you design your business and that becomes your retirement if the IRS doesn't come after you.
What he's saying is you take a proactive approach, a defensible, aggressive but defensible approach, and you set aside that cash that you saved for a rainy day.
That's a very aggressive position if you're going to take it on a tax return. You would see my mind, because I go backwards and upside down because of cannabis. In my mind, a conservative position is applying 280E to more and then paying the actual tax to the government, not stockpiling. You pay it. You pay the bill because it's due. It's very aggressive to take a aggressive position and then only pay that little amount and stockpile away. That's a very risk position in my mind.
I'm not saying very aggressive. That's a
I'm looking at everything backwards.
I've got a question. I got a question based on what you said.
Champs didn't pay penalties, by the way. Champs didn't pay penalties. They got other penalties. Same with Harborside too.
Well, they kind of won. So my question is, Katie, could we pay it as if we owed it all and then do an amended tax return the next year to say we want that back because we made a mistake and we paid too much?
What argument would you use?
There's a claim for refund. There's a claim for refund if they change the rules at later dates. You can, but it's special language you have to put in the tax return when you file.
And a protective claim is actually has failed 100% of the time that it's been used in cannabis. So I'm going to say no.
Can you say what protective claim means? I don't remember that word.
Well, there hasn't been, nobody has effectively used it yet because they haven't changed the rules. What do you mean by that?
Right, that's why it's 100%. Like you would not be able to, what Heidi is asking, you would not be able to go back exactly 1 year later. You could put a protective claim in that says, this is, the law is unsettled. The law is not unsettled, unfortunately. It is clear if you traffic in Schedule 1 drug, you're supposed to have this applied to you. The question is, what is application? But the law is clear. You're trafficking, your 280E applies. So the protective claim normally has language that says, because of the uncertainty of this industry and the fact that the United States Internal Revenue Service will not opine and give us best practice on this on how we practitioners are supposed to apply 280E, we reserve the right to amend at a future time and will expect to be able to have a refund issued to us if we prevail. That's what that protective claim is doing. It doesn't always, I can't remember, does it start the clock or does it stop the clock for
it allows you to go back beyond the 3 years.
Right.
And let me say one more thing about that though. It is unclear because the current definition of cannabis, the only reason 280 applies because it's Schedule 1, which is claiming that there's no medical benefit for it. So what happens if they decide that cannabis does have medical benefit then? Should it have ever been on a Schedule 1 drug to begin with? And so then those people who have been taxed like into the ground, I mean, were they unjustly taxed? Now, I mean, I don't want to get too far out.
Yes, regardless of any of the, they've been unjustly taxed because 280 is an unjust tax in my mind in that regard. But
Can I ask a 280E question? So 280E applies to any enterprise that is trafficking, yes? And then within
in Schedule 1 or Schedule 2 drug.
Right. So somewhere within 280E, it then says something like expenses incurred in the, what's the language of to like,
No debit or no deduction or credit is allowed for a business that traffics in a Schedule 1 or 2 drug according to the Controlled Substances Act of the federal government. See site here for businesses, you know, that according to federal or state purpose. So federal or state law. So they could just fix it if it was federal and state, but no, it's either. But you know, it's no deduction or credit. And so, you know, but that's in the calculation of income taxes. So these cannabis businesses are getting ERC. Why? Because that's a payroll tax credit. It's not for the calculation of income tax. The job of 280E is to calculate income tax on your fictitious profit. They want to strip your ill-gotten gains, your
Right.
profit away from.
So for us as a state, as we think about this, it seems we want to make this task of them picking it apart as difficult as possible.
That's the goal.
So every service center, you know, if we were coming up with guidance of how to protect yourself from 280E, I think what I've heard from y'all is, you know, have multiple modalities, make sure your services are separable. And so, you know, and sort of, it seems like there's a set of things we could be doing and like have a designated small physical footprint as where you provide the substances. So if you lose the deduction for real estate, it's just for that tiny bit. All the rest is protected. So, and it feels like sort of among the community, they're starting to coalesce around those best practices. And it seems if we could get those out and more people are doing it, the IRS would have a tougher fight on its hands.
Yeah, I've tried for years to try to create what would a best practice be, because 471C, which is nice, then the tax code that came in with Trump.
Talk about that a little bit. Like I wanted to talk and see how that might apply to service centers.
Well, I think it does, because it's an inventory-based business. I think you absolutely want it to apply, quite frankly, because it's a protection written into law for the small taxpayer. We like us laws that protect, because the service can't issue a memo and fuck up our day. So you got to actually go to get somebody to change a law, which is really hard right now. So, you know, I do think that one of the pieces of language, both enforced in the general 471, the code sections of 471 relate to how a business that has inventory has to deal with its valuation. and the creation of the cost of goods sold methodology on the tax return. And what it does, the ability to be able to, there is language in 471 that already says, follow these rules or show us the best practice of the industry that's being unilaterally followed by the majority of its participants in that segment. And so I've been trying for ages to get cannabis to figure out a best practice, but there's too many horses out of the barn, right? That's why I feel like psilocybin does in fact give us a roadmap and a capacity. If we could really get, for lack of a better term, a monopoly on the consistency with which we are all printing the same invoice and we are using this line item, which is the pre-session, and this line item, which is the post, and those dollars are being tracked here. And that side of the balance sheet and profit and loss is not subject. And then we have some group being either more conservative or less that are treating that in between, that experiential part where psilocybin is in the room and in the person. Some people like Heidi might be choosing to make that entire part subject to 280E. Other people might be saying, again, maybe only when it's being delivered in, and then we're not going to subject that to 280E, but there would at least become some consistent places where as an industry, everybody's choosing to make sure that the beginning and the end is definitely not 280E. Everybody's going to try to have some sort of ability to turn off the licensed premises as a service center and allow for there to be other modalities like you're speaking with, even if not health related modalities are going to have some sort, are going to make the argument that there's a separate trade or business involved in this because the economics don't make sense yet when you can go for $5,000 to Jamaica for 2 weeks and have 3 of these sessions versus 1 day in Oregon, right? Or something. So I think that they're really, if we could get the small group of people, and I think it's starting to happen, talking, and the professionals that are willing to sign tax returns to kind of come to a generalized model that'll have some gray for the Heidi Ventures of the world where they're a little more conservative and have some black for the Andrew Yoras that are less conservative and more willing to take an argument a little bit further. We just don't want everybody to be like this, we want people to kind of be in a spectrum would be
That's something that he wants to talk about. And then I want to spend some time, and for the sake of keeping this recording a little shorter too, but I would like to thoroughly introduce 471C, Katie. But Seth, you had a question?
Well, yeah, I just wanted to comment on what Katie just said. That was a great outline of what we're talking about here and what's ideal. One thought that I'm having is that a lot of the things you're asking for a best practices outline are already baked into the bill.
I know, that's what's so exciting about it.
Yeah, I mean, so like there's the limited access area and client administration area. These are all part of, premise applications. So you've already got your small limited access areas where the trafficking is taking place that's baked into the bill. The invoices, listing out and separating services, that's already baked in there as well. You have to show description of fees. You have to separate services from the product out. They're also
it's like Dave Kopelek has had to fight with me for the past 12 years to try to get all of those sorts of positions because that's my cannabis position right there.
Yeah.
A lot of it.
Yeah, so I mean, I see a lot of this is already being in there without much wiggle room for service center operators to veer off the path. And then the things that you commented, you broke down kind of 3 areas of what's important to create the narrative that we're looking for in here. And so I just real quick wanted to address those 3. One was about the services that are not connected to the consumption of the psilocybin. And I think every service center is going to have the same process where during the screening visits, those preparation visits are in part screening as well. Every service center is going to have X number of clients who come in who get declined services based on whatever happens during their screening. So even if you're not offering an additional service, there are going to be people who are essentially coming in for a consultation only and are not going to ever receive psilocybin. You could easily, as a service center operator, also just offer consultations without the expectation you're going to do the psilocybin and sign all the informed consents, just like you could do the same thing for integration, right? There's therapists and non-therapists out there who already offer psychedelic integration that doesn't have anything to do with consuming psilocybin. And like in that same vein, the general like harm reduction model, using kind of that as a baseline premise for what the service centers are, is probably a better model to be using than therapy, medical intervention, and so forth, right? There's businesses out there that do harm reduction, like I'm thinking of like Zendo Project. It goes to festivals in Burning Man where they're supervising people who have consumed psilocybin, and their job is to be sitters and to do harm reduction measures. That same kind of model could probably be applied to what we're doing in here. The premises part as well. My comment was that turning on and off the premises seems like something that's already again baked into the land use application and drawing lines around what's your service center, what's unlicensed areas. And while you can't sublet your space to another facilitator, another business doing the same thing, you're allowed to use those same licensed areas for whatever the business is that you're physically located in, right? Am I interpreting that right?
Yeah, I mean, I think you are. That all of the things you're highlighting, and thank you for that, are in fact the strength that we're trying to bring to making the tax position argument. Here's the argument from the IRS. Don't care about your state law. You're trafficking in a Schedule I drug, 100%, period. So it doesn't, what we are seeing is that there's good foundation in the law to be able to give us a roadmap to begin to make an argument. But the reality is that the IRS doesn't care about your argument, Seth. The IRS is going to say, if psilocybin, 100% trafficking. And that's where Champs walks back into the room, because that's what they said to Champs, and Champs won. And it won because it had good documentation. It had the ability to be able to ask the tax court to follow the rules of the way that they had built their service center and membership model to explicitly show the times when people were not in fact engaged in anything that had to do with cannabis whatsoever, which was most of the time, and the time when they did. And so that's where we need to drill down, because we do have good foundations. We do need to have some standardization as an industry, as a service center industry, I think, to put some best practice pieces out. So I'm glad HAP was pulling that, because once we kind of get to a place where we can say we're going to defend, the service is still going to come in and say, nope. And we're going to say court. We have to say court, because if people will not go to court, no more Champs, no court case. If you settle, it's privileged, and no one else can use that settlement for the industry. They too have to sit in front of a revenue officer and negotiate. So we have to be brave in the face of what are better odds in psilocybin, in my mind, than cannabis. That's really
I think the worst case scenario by going through all of that is that you just end up having to, essentially we get assessed what we would have probably paid had we not gone in the direction to begin with. Because the IRS doesn't write the code, the tax code, Congress writes the tax code. The IRS has to
enforce it.
they interpret the code and we interpret the code. The IRS and the tax accountants are on the same level.
Yeah.
Like
That's
we
why
look
you
at them
have to
eye
get, you
eye.
have to bring court in to the picture. We
Yeah.
have to, I am doing a much better job right now, benefiting off of 11 years in cannabis. I am doing a
Mhm.
much better job
Mhm.
right now saying to people, it is not about not making the position or not doing it necessarily, but it is about being ready to go to court, guys.
Mhm.
Because when differences in interpretation happen, that's what court's for.
Yeah.
Differences of interpretation.
You were
We
talking
want
about
them
471. I mean, I definitely want to get, I don't want to get too far away from the
go into 471C.
we could bring, bring to the table,
Yeah.
So why don't you talk about,
No,
I like
you talk about 471C.
You
I
are
talk about 471C all the time.
You're way more eloquent. I'm like an ape with talking about 471C. But so you brought to light some of the interesting another character of 471 in general is if this is industry standard, right?
Yes.
Industry standard actually has some sort of impact. So it's
You can
beautiful
make an argument.
that
You can just make the argument.
471 at its base, because there's A and there's C and there's additional like additions to the code. But
There's 8,
at its
there's 11,
base-
there's 13, there's
yeah, right. And I get a lot better than me, but I do love the idea that there's already baked into the rules how we do things that create an opportunity for consistency between accounting methodologies,
Yeah.
which is neat, or between accountants. And now
Yeah,
we
but you
have
don't follow my tax code. You're way more liberal than I am. So, or my tax.
so 471C. I'll tell you what 471C says. This is for businesses that have gross revenues under 25 million. And it applies for all businesses that you can base your inventory capitalization, and Katie, feel free to correct me if I'm wrong here, on your books and records,
Methodology. Yep. Presented
your
in books.
methodology. It's as simple as that. And what that means is that if you deem a facilitator, for example, as part of your labor costs that go into whatever it is that your services that you're providing, you may capitalize some of those costs into inventory as well as deduct them in the year that they are related to the services provided as cost of goods sold. I don't know if I said that very eloquently.
I mean, it's close. Yeah, it's close enough for
But I don't really want to go into 471C for this specifically. I was hoping to come up with like a more simple way of doing it. So I haven't really thought it out completely, exactly how we would be able to apply 471C to service centers. But it would look something like that. It would look like, based on your books and records, if you deem cost of labor as cost of goods sold, then you, according to 471C, can deduct that.
B.
So is that for employees that are facilitators or independent contractors that are facilitators?
Doesn't matter.
Doesn't matter.
They are-
So,
if
but that
you take-
means that you collect all of the money from the client and then you pay the facilitator for being there.
Yes.
Well, that's the protection that the facilitator is going to want from the service center, which is why the service center is going to charge a premium if there's an independent contractor that's coming in to do facilitation on the service center's behalf. The direct labor is in the eyes of the IRS is either 1099 or W-2. Direct labor simply means that the revenue that was generated in the line above was made by this person that's in cost of goods sold. So, that's why I said, we're gonna have to take a position both on the beginning and the end. And then we're gonna have to take a position on the middle, because the middle has there's a facilitator in each of them. But I think that the service is going to try to say the facilitator is inseparable because you can't have psilocybin without a facilitator. The facilitator is inseparable from the trafficking arm of the service center's business. So my counter to that is, if it's inseparable, then it is cost of goods sold.
Mhm.
Now, if you want, but then that's why I said to Andrew, you want it both ways. Hold on. If we're taking the facilitator at the preparatory and we're taking the facilitator at the integration and we're saying, oh, they're not trafficking, then we would also need to deduct them. We'd need to be consistent, right? So the risk at the IRS level is that the IRS comes to a different conclusion and says the facilitator is a service that you can't deduct, and they would strip all the facilitators, the cost of facilitators away. That's why you got to go to court, because their interpretation is going to be a blunt stick and ours is trying to be nuanced.
Hey, Katie, can I ask you like some technical questions about 471C though at some point? B, you have your hand up.
Just to follow up with the facilitator service center role. So if a service center has an independent contractor come in and they're charging the facilitator to be there, and the facilitator's getting the money from the client for their fee and for the space, how would that affect the taxes and all of this?
Potentially the facilitator, because it cannot divorce its money from trafficking, is subject to 280E.
Potentially, that I think that would be a long. I think that would be a long.
It depends on whether they decide that the consumption of psilocybin is trafficking, which I think is a long shot. But if the
Well,
IRS can
the
try it.
facilitator doesn't have anything to do with the consumption of the psilocybin. So the
Right,
service
but you
center
can't consume
representative,
psilocybin without a facilitator, which is the other problem.
right.
So if
The
they deem-
facilitators there after the after the consumption happens. So the
But you
service
can't
center
divorce them.
representative.
So it's like bookstore
Yes.
A. You
Yeah.
have to, you get coffee. Yeah, I'm drinking coffee, but I'm really a bookstore, right? So the facilitator is either the bookstore or the coffee. We don't know which, but they're together at one price. The problem is not, that the facilitator is, and maybe to Andrew's point, there's just people that are doing facilitation and integration, like harm reduction. And that's a great idea. And I've never even heard of one of those. And I'm going to go research that. Thank you, Seth. But the idea that, again, certified public accountant, I only help people kind of. But, the reality is that the problem that the services is going to say is, where is the money? You pay $5,000 for 6 hours with this facilitator. You literally cannot take that psilocybin without one. They are together for this. And we can't
But the
divorce them. But is
facilitator,
there a way
are
we
you
can
saying-
divorce them in other places? Or can we add more modalities, to your point? Can we do more things inside of that space that allow us to suck up or make enough money to be able to deal with the punitive tax? And that's where I think we need to try to go, if at all possible. I don't know whose hand was up first, but.
Oh, it was me. It was me. I know we talked about this a little bit earlier, but I didn't really quite understand it. Has any cannabis business made the case with the IRS that the Schedule 1 is unjust and based on
That's a totally different.
non-lies?
Yeah, that's totally.
Yes, they have,
let's
and
not
it
spend
has
too much
failed.
time
They
on this
won't even
question.
entertain
So
it.
it's failed. Okay.
They won't entertain it.
There's people who are working on it,
They
but
work, but it's entertained. It's not been entertained by the service. So they've not won an argument, even in medical, even with Charlotte's Web, even with and that's why it's so incredibly powerful. Why that Biden directed the FDA to start actually making there be research, because there's an entirely independent body that has to come in and say, this has medical benefit, you should, and make a recommendation to deschedule. And they have not done that yet, but that's what that tweet started, a series of constitutionally required timelines to dominoes to fall. So that argument might potentially be able to be made. That's, to Justin's point, people are working on it. We're trying to get our hands
Fine.
around the greased watermelon however we can, but it has not won an argument yet. But psilocybin has won.
There's tons of other, tons of other constitutional like
Yep.
arguments. I mean, fun angles that everybody has gone in all different directions, but it's like molasses. Andrew has his hand up.
So just going back, you kept mentioning this moving the facilitators into as a deduction for cost of goods. That's a little confusing to me because I thought cost of goods,
Me too.
because at least in my businesses, my consulting businesses, we treat you know, the labor of the consultants allocated as a cost of goods sold. So that seems like you could do that regardless of whether it's a 280E business or not. Right?
Can I expand on that really quick? Can I like also clarify and I'm going to make it a little bit more technical because there's the IRS form 1125, right, Katie, and the cogs on the
1125A. Yeah.
That is very much specifically for producing, like
It's
production.
an inventory based. It's required of
It's
inventory based businesses.
It's for when you have inventory. There's inventory, and that's why I wanted to actually clarify with Katie too on her interpretation of 471C and how it might apply to this too, because that's the hard part here. That would be the hard part. When you say that your facilitators or your counselors are cost of goods sold, that's not necessarily true because you didn't sell anything. You're providing a service. And really, if you're preparing that tax return correct, that doesn't go in cost of goods sold. It just goes in contract labor down below the line there. And Katie, you might have a different interpretation, but I did a deep dive into this with my business partner, and we found something like interesting about it. And that was what we found is that those
They're services. It's a
right. So
Yeah.
when we're trying to move costs up into cost of goods sold for cannabis businesses,
Right.
it is very much related to the cannabis on hand.
Yeah.
And then we can apply overhead and allocate some of the overhead costs into the capitalization of inventory, which gives us the ability to defend our position of deducting these costs. Now, that is our approach with 471C. How would 471C, how would we be able to do the same thing? From your perspective, do we have to have inventory in order to be able to deduct?
if you have no
expenses and cost of
inventory,
goods
you have
sold?
no cost of goods sold. And if you are selling the
No inventory,
service,
you have no cost of goods sold.
if you have no inventory, you have no cost of goods sold. If
Right.
you have no cost
Right.
of goods sold, you are taxed at gross revenue. So
Yes.
in my position, you must be an inventory-based business. I think that the rules are pretty clear that the amount of controls over what this is makes it inventory to you. And in my mind, again, under 471, it is not where a dollar falls in a traditional profit and loss per se, because who made that rule? It's what does that dollar do in relationship to the trafficked substance. So again, if you can't have psilocybin without a facilitator, how can you divorce them in out of cost of goods sold? That's my argument that I'm proposing. Now, clearly, I have not made this argument. The service is not in the room. I've never filed a return on that. We're throwing spaghetti at the wall. But in my mind, because you can't now, bud tenders, totally different idea. They're just selling. Inventory control person having to control that inventory, they're not selling. A facilitator is neither selling or controlling the inventory. They are an entirely new, weird thing. But the state requires them to be present. So I do not think you can easily divorce them in just the in this actual session itself. We have this problem with an argument on either side of it, which is why I think that I cut it into 3 categories. But in that in that session itself, you can have a facilitator and some dude not taking psilocybin. That is talk therapy. Or you can have psilocybin and a facilitator. There is no in between. They do not get to walk in, buy psilocybin, and go to the park.
Mhm.
And so in my mind, at least from a state position, we have to start at the state, which is where I start with 471 and 471C in cannabis. What the state requires you to do, in my mind, is the basis for your legal argument at the federal level, because it is best practice, because the state says it's best. It is to secure, control, maintain public safety and health, which is the job of the fucking federal government in some ways. And the state has taken it upon itself to do this because by mandate of the people of that state, they have created an opportunity for psilocybin to exist as a modality. Health or otherwise is out for debate. But the reality is those three things exist. And I think you can make the argument in a landscape that says you cannot divorce the facilitator from the psilocybin. So therefore, it is part of cost of goods sold. I could be 127% wrong, guys. We got no idea.
So it
That's
sounds
not-
kind of like I just kind of want to conclude a little bit and then we'll go ask your question, but it sounds like a combination, and I think you've said this already and I'm trying to understand. We can take a combination of the approaches. We can segregate the session from non-session sessions or pre-sessions and post-sessions, and then there's the psilocybin session. We can segregate that. We can track time, for example. How much time in this room was dedicated to the psilocybin session versus the sessions that were not in the psilocybin, that were not psilocybin sessions. But then we can take that and we can potentially capitalize to inventory labor costs, for example, under 471C. Or
I think it has to be under 471C, and I think it has to be a C corporation, because if we get it wrong, the tax dies with the corp. It doesn't pass through to the individual therapists and or the psilocybin service center owners, and that's how we best protect the client from our accounting professional knowledge. It's got to be a C, because if they're going to drive you out of business, the saving grace with Champs, a 501c3, when it's stripped away, it's a C corporation. So at least even at the end of the day, they're out of business.
They'll walk away.
They walked away.
Yep. B, I'm going to go ahead and let's hear B's last question or comment, and then
we can talk about this for a million years, but
we could. Yeah.
Well, I'm just trying to clarify in my mind. So if a service center wanted to try and allocate as much time of like a service center representative and a facilitator towards this cost of goods, because they are totally linked. You cannot sell the psilocybin without a service center representative. So that's what, 5 to 10, 15 minutes of their time at the service center. And then also the facilitator must be there for the entire administration session. So for that to happen,
part, I think, is a problem. You're not going to be able to, the seller, the service center representative looks like a bud tender in my mind. They are not deductible, but the facilitator, because they aren't selling, they're literally sitting there.
right.
I think it can be a cost.
Again,
So the service rep is not deductible for their time, but because the facilitator is required for the duration of a client's administration session where they're on psilocybin, that if the service center is paying the facilitator, then they could potentially have an argument that is part of their cost of goods.
I think they've got an argument there. They'd have to be consistent, and we'd have to write that argument in such a way that we can track like all those good things that are already inside of the all of those things that are already inside of the rules making body that give us a structural framework. I think give us this opportunity to make this kind of argument. It will, the conservative side is that you get taxed at gross profit, guys. It's even, so 280E says services SG&A, selling, general, and administrative costs are non-deductible. In the name, it's a service center. It's not a retail facility. It's not, I mean, we're out on a limb when we're saying it's, to Justin's point, even an inventory business. So we're actually trying to structure it like an inventory business to make sure we can have cost of goods sold. Because if you can't have cost of goods sold, you're taxed at gross revenue, period. Because 280E says one little bit of anything, any Schedule I drug pollutes your entire tax return.
Yeah, and I think we can layer, I think that there can be some layers where we could kind of go to like what we were talking about before, where we implement like the CHAMPS model and try to do a really good job with there. But we can also even like hammer on the psilocybin trafficking aspect of it and potentially chip away at it using 471C. And you got to remember that the law says it's based on your books and records, you know. And
so, yeah,
and
ultimately at the end of the day, the service has to come in and,
or you can be more aggressive with your interpretation of that 471 language too.
yeah, they have to come in and audit in order to open it up for that interpretation, which again, I go back to the C word that no one wants to hear, court. You got to be ready to go to court.
I have a colleague who said they just defended a 471C tax return in audit and they did not change the position.
I have two lawyers that just called me last week, both of whom out of Greenspoon Martyr. Both of them have big 471C cases that they just won no change audits on. So it is in fact, but the problem is they didn't go to court. This is all private settlement. So they can call me and talk to me about it, but I have no ability to really, it doesn't help the industry as a whole until we actually get precedent.
Yeah, well, I kind of want to keep it, I kind of almost want to keep it, like if the IRS is saying no change, I don't want to bring it to the, it's like scary to think of Congress getting involved and trying to implement that language, the language, you know what I'm talking about, right, Katie? The language where they try to regulate and say that they close the loophole on 471C. And then Congress getting wind of that and then actually sticking that in the code, thus eliminating 471.
I don't think there's any political will for that. I don't think you have to worry. There's barely political will for these guys to get out of bed in the morning, let alone change tax code. So I don't think that that's a concern. And I do think that, especially in the realm of cannabis, this is why I disagree with cannabis in relationship to these 471C audits, because the public opinion is so pro-cannabis and people who are not entertaining it as making change are looking like such dinosaurs. Even Biden, who's been anti-weed his whole political career, is making small changes. I think you can make the argument that psilocybin now has this tittery, like, ooh, it's the new kid in town and may have problems in that, but cannabis is starting to be like, yeah, you just take these. Like, if you apply 280E even reasonably, they're going to leave you alone. And I think that that's where we also need to remember that psilocybin is going to be able to get some benefit from the last 12 years of cannabis being in and changing the public perception of tax. But we're still going to have to take a position, write it down, actually do it, and then be able to prove it at the end of the day.
Yeah, at least for the psilocybin industry, they do have the cannabis industry to have like really paved the way for these kind of arguments. I'm doing tax returns for dispensaries in Michigan and some of these states outside, and those accountants have no idea what they're talking about. Zero. And it's amazing. And even in California, this big there's a big firm down in California didn't make their adjustment to the California return. They do like 700 cannabis tax returns.
Yeah, well, MGO doesn't have a great reputation.
So we're nerding out there. I'm going to go ahead and